In this video, we continue talking about income statement. In the previous video, when we talked about income statement or statement of profit or loss, we explained some fundamental concepts about this statement, such as formula and the accrual principle. But now, in this video, to be more concrete, we give an example of income statement. Let's go on with the example of income statement. In the first row of income statement, we have sales. In this example, sales for the period are 60,000 euros. Then we have cost of sales. In this example are 20,000 euros. Sales minus cost of sales gives us gross profit. Gross profit in this example is 40,000 euros. After gross profit, we should list operating expenses, such as, let's say, salaries expenses, 10,000 euros, office rent expenses, 7,000 euros, depreciation expenses, 3,000 euros. The total operating expenses are 20,000 euros. Gross profit less total operating expenses gives us earning before interest and taxes, or operating profit, for 20,000 euros. Then we should list non-operating incomes or non-operating expenses. In this example, let's suppose we don't have any. So the profit before tax is the same as operating profit. After profit before tax, we have tax expenses. Let's suppose tax expenses are 10% of profit before tax, which gives us 2,000 euros. And in the end, we have net profit or net incomes for 18,000 euros. Now let's go on and explain how did we come to these results. The first part is recording sales. So during the period, as we see, sales were 60,000 euros. So we credited sales during the period for 60,000 euros. However, we debited cash only for 40,000 euros because we received only 40,000 euros in cash. The other 20,000 euros were not received in cash. We are going to receive them the next period, let's say the next year. So we recorded them at the account receivable. So as we see, always according to accrual principle, we should record sales in the time period in which they occur, regardless of when do we receive cash. The second part of the example is recording salaries expenses. So we debited salaries expenses for 10,000 euros. And since we paid for these expenses, we credited cash for 10,000 euros. Next, we recorded office rent expenses for 7,000 euros by debiting them. And we credited cash for 5,000 euros, since we paid this kind of expense. Indeed, as we see, we didn't pay all the expense for rent. We paid 5,000 euros, but the expense was 7,000 euros. The difference for 2,000 euros was recorded to rent payable. So this is a liability. Again, the accrual principle requires us to recognize expenses in the time period in which they occur, regardless of when do we pay cash. So we recorded office rent expenses for 7,000 euros, even though we paid only 5,000 euros for them during the period. Then we have depreciation expenses for 3,000 euros by debiting them, and we credited accumulated depreciation for 3,000 euros. Depreciation is a non-cash expense, but we are going to explain it when we are going to talk about depreciation in the future videos. And in the end, we had tax expenses for 2,000 euros, so we debited tax expenses for 2,000 euros, and let's suppose we didn't pay for this liability. We are going to pay for it the next period. So we record it as a tax payable as a liability for 2,000 euros. So this is all for today, guys. Till the next video.